Hi, this is Editor's Take. I'm Sakshi Batra and with me is Gaurav Chaudhary. He's the Deputy Executive Editor of Moneycontrol, and we are going to be discussing about the big fiscal measures announced by the government to boost the economy. Thanks a lot, Gaurav, for joining in. Well, first up, I have to ask you, what was your first reaction and were you pleasantly surprised with these big moves to boost the economy that the Finance Minister Nirmala Sitharaman has made today?
Absolutely. Clearly on not on expected lines, in the sense that one would not have expected the government to actually announce big income tax changes outside of the budget, and that has rarely happened. So this is something that would have taken everybody in the corporate world by a pleasant surprise. I don't think anybody in the corporate world would have expected that this kind of changes would have come right in the middle of a financial year. Even if measures were expected to boost, try to engineer a quick turnaround in the economy, I don't think anybody would have expected this kind of measures to have been announced in the middle of the budget, as particularly so because the government has decided to go ahead and bring those changes through an ordinance, which kind of demonstrates the government's urgency to try and front load some of the changes that otherwise probably would have come only in the next budget.
Absolutely. And the first reaction of the markets was also fabulous. What we saw on the Nifty and the Sensex today, huge rally, and also the single biggest day gain which we have seen even in Nifty Bank as well.
Yeah. So that is clearly, so the markets are cheering the move and on expected lines, because nobody, as I said, nobody expected this kind of changes would have been announced in the middle of a financial year, particularly income tax changes, because I would assume that many of these measures would have been recommended in the direct tax reform by the Direct Tax Reforms Committee, which submitted its report last month. And the government had not yet made the report public. It had said that it was examining and studying it. One would have expected most of these changes to have been, discussed probably in the winter session of Parliament and before it was brought into effect by the time the next budget was presented. But that is why the markets are really cheering this move. The Sensex is up about 1,800 points, which is something that has not been seen given the very tepid atmosphere otherwise over the last 6 months.
Absolutely. And Gaurav, corporate tax slashed, this was a long-standing demand of the India Inc. Whenever at least in the last two budgets, this was like really expected by the whole of India Inc. that at least this corporate tax will be reduced substantially for the entire community of corporate India. And this is definitely a welcome step as well. But will this now boost investments which have been expected to kickstart now?
It'll at least give more money in the hands of the corporates because their tax outflow will come down.
Yeah.
Please remember one thing: those who had a turnover of 400 crore or less, they were already subjected to a lower income tax rate of 25%. But this is for large corporations. The large corporations are the ones that have a lot of money to invest, and this is essentially to encourage and goad them to invest. Now, the effective tax rate for the large corporations with a turnover of more than 400 crore actually now stands at 25.17%, including surcharges, although the headline tax rate has come down to actually 22%. It has come down from about 30% to 25.17%. That's a huge drop, nearly 5 percentage point drop in the total effective tax rates of large corporations. One would expect, even if they don't have the money to surplus funds to invest right now, what it does, it gives a huge boost to sentiment, and it also takes away a lot of uncertainty that was clouding these corporations about what was the government's plan so far as corporate income tax rates were concerned. That takes away that uncertainty, and it also government has given a fresh set of incentives for new manufacturing companies that are set up after October 1, 2019. Will now be subjected to an even lower tax,
which is now about 17%.
About 17%, which is significantly lower. So they should. The whole idea is now to encourage new investment, particularly in the manufacturing sector, into small-scale sector. Small-scale manufacturing is the one that the government probably would have identified as the big job creator. So at 17% income tax rate, a new company in the manufacturing sector that is set up from after October 1, 2019, and if manufacturing starts by 2023, this is a good enough incentive for corporations to set up new manufacturing units, particularly in the small scale sector.
Right, and I have to ask you about another big announcement that was on the minimum alternate tax. That too has been slashed down to 15% from 18.5%. What will be the immediate and long-term impact of this?
So the immediate impact, clearly the tax outgo goes down, so that gives more money in the hands of companies to spend and invest. And that is, if the companies end up investing more, the objective here is to goad them to invest more so that they add new capacity lines, and if they add new capacity lines, they'll end up hiring more. But the key question, however, here is to what extent this is a supply side problem that the government has completely addressed now, more or less completely addressed. The idea now is the objective now is to boost demand. That has to come from raising income levels of individuals. At least on the corporate side, corporate income levels, at least with the tax outgo going down, the investable surplus, corporates will be left with more investable surplus to spend. So that extent, corporate income should go up.
Absolutely. I think next Friday everybody will be, hoping for some cut on the personal taxes front.
I do not expect that happening, but you never know given what was announced today. Many of these, as I said, probably would have been part of the Direct Tax Reforms Committee recommendations. And the Direct Tax Reforms Committee recommendations, as we understand, has also made a series of suggestions and measures that they want the government to take, particularly in the individual income tax rate. Ideally, one would expect those changes to come about when the next budget is presented sometime early February or late January. But going by the way that the government has gone ahead and made these announcements today through an ordinance, you never know what's in store next. Right.
Now, Gaurav, another big step was that the enhanced surcharge, which was applicable on capital gains for FPIs, will not be charged. Now, this is another big step. So far in the last 1.5 months, we have been reeling under a big economic slowdown, not just domestically, but even globally. And we have been seeing huge outflows of these monies. Do you think FIIs and FPIs will be reviving the sentiment, pouring more money in Indian markets now?
Oh, yes. And that is what the objective is, at least. What the government has gone ahead and done, what the finance has gone ahead and has told the foreign portfolio investors that this is a welcome place to invest money in. So the idea is to turn India again into a preferred hotspot for FPI investment as a preferred investment destination. And by doing away with this, the government has told FPIs, come ahead and invest. This is kind of a red carpet again, laying down the red carpet again for FPIs and doing away with the uncertainty that was clouding this class of investors.
Right now, Gaurav, lastly, revenue foregone by the government by doing these kind of tax cuts is huge, 1.45 lakh crore rupees per year. So will this also risk government's fiscal math in any way?
That is a question that the government will have to, it's a tightrope walk. Given the fact that income tax and tax collections have been below par, at least in terms of budgeted estimates, the run rate is to make up for the budgeted estimates, the run rate or the growth in income tax and indirect tax collections will have to significantly gather pace. And this tax cut comes at a time when tax collections have been growing very tepidly, and that's quite understandable given the atmosphere of weak demand that is currently prevailing in the broader economy. Large part of the revenue foregone is 1.45 lakh crore, and to what extent this will be met through the additional surplus money that the government has got from our transfer of RBI surplus and dividends, it needs to be seen. But clearly, I don't think the government can, get 1.45, plugging a gap of 1.45 lakh crore is something that will either have to come from the additional surplus that the government has got from the central bank, or the government have to more than meet its disinvestment targets, or the tax collections will have to gather pace to such an extent it more than offsets the lower growth until these months. Unless all of these things happen, we might see a slip up in the fiscal deficit because the government might end up borrowing more to plug this deficit. But I don't think that's going to happen because it now feels a little more confident because the RBI surplus money is with it.
Absolutely. Thanks a lot, Gaurav, for sharing all that insight. Well, it's a fabulous Friday. Finance Minister's announcements have been big cheered by the markets also today. And corporates have also taken to Twitter and social media. They have been congratulating and welcoming the steps taken by the government, which we all hope will actually kickstart the investment that have been long waiting for. Also, kickstart consumption is something that is very, very important for the markets and the economy right now. We'll just have to wait and watch as to how these measures really play out on the ground. Thanks a lot for joining us in this edition of Editor's Take, and do stay logged on to Moneycontrol.com for more news and updates. Thanks for watching.